Is the 50-year mortgage actually a good idea? Well, I took a bunch of notes and we're going to go through all the numbers together and come to a conclusion by the end of this video. We'll base our purchase price here on $400,000. Now, on a $400,000 home, if you have a 30-year mortgage, your monthly mortgage payment is going to be $2,660. Now, on a 50-year mortgage, your monthly mortgage payment is going to be $2,380. So that's about a $280 savings. Now, where the numbers start to change here is when you look at your principal payoff. Each month on your principal, you'll be paying off $327. That's the amount of equity you're building in your property. Now, that's on a 30-year monthly mortgage. On a 50-year mortgage, you'll be paying off $47 a month. So not nearly as much of a principal payoff there. Where the numbers get spicy, hold on, man, I got to put my glasses on for this. Now, on a 30-year mortgage, you'll pay off by the full life of the loan, $955,600. That's roughly $550,000 of interest. Now, on a 50-year mortgage, you will pay off $1.7 million. That is $1.3 million worth of interest. My guys, that is a massive number. But if that wasn't the case, when you look at what type of equity you'll have after the 10-year mark, on a 50-year mortgage, after 10 years, you'll have roughly $14,000 in equity in the property. Now, on a 30-year mortgage, you'll have roughly $56,000 in equity. To me, this is where the banks are going to be rubbing their hands in the back like Birdman. They're winning on the 50-year mortgage all day long. In my opinion, a 30-year mortgage makes a lot more sense, mostly because you'll actually be alive by the time you're done paying it off. And the equity, the principal, most people are living in their homes roughly 7 to 10 years. And if you only have $14,000 of equity by then, you won't be able to afford to sell that house without appreciation, which is not something you always want to bank on. Hope that helps.